The first indicator, let's add Smooth Heiken Ashi by Sam Account X. First let's learn how this indicator works. As you can see, this indicator shows us the downtrend and uptrend very well. Note this important point: whenever the shadows of Heiken Ashi candles hit the main candlestick, it indicates that the market is moving sideways. To open a buy position, whenever the candle moves away from the Heiken Ashi indicator, we enter a long trade. Here exactly the candlestick moves away from shadows of Heiken Ashi indicator, but for final approval a bullish candle must be formed. When the bullish candle moves away from the indicator, we can enter a buy trade after having the confirmations of other indicators. Exactly opposite is true for short signal. To enter a short position, the candlesticks must move away from the Heiken Ashi candlesticks from downside. And whenever a bearish candle is formed at the same time, the condition for entering a short trade by Heiken Ashi indicator is established. But as I said before, we should wait for confirmation of other two indicators to enter the trade. Now let's add other two indicators to our chart. So, for the second indicator, let's search for volume flow by Lazy Bear. And for the third indicator, let's add an exponential moving average. Okay, now we need to change the length for this moving average. So, let's change the period from 9 to 200 and make it a bit more visible. Now we need to make some adjustments to the volume flow indicator. In the input section, let's change the maximum volume cutoff from 2.5 to 0.5. And let's also make these lines a bit more visible. Now the strategy is complete. Let's get into the entry rules. We're only going to be looking to buy if the price is sitting above the 200 exponential moving average. The price has to close above the smooth Heiken Ashi. Our trigger candlestick also has to be bullish, and it doesn't have to touch these shadows. And lastly, we will need to have the volume flow indicator bullish, which means that the green line is above the orange line, and they both are positioned above the middle line. And as soon as we have all these conditions met, we will go ahead and place a buy order. We will set a stop loss at the recent swing low, and we will be targeting 1.5 times the risk. Exactly opposite is true for short. We only going to be looking to sell if the price is closed below the 200 EMA. The price also has to close below the smooth Heiken Ashi. Our trigger candlestick has to be bearish, and it doesn't have to touch the shadow of this Heiken Ashi. And the last condition would be to have the volume flow indicator bearish, which means the orange line has to be above the green line and they both have to be positioned below the middle line. We see here we have all our conditions met, and this is going to be our trigger candlestick. We will set our stop loss at the recent swing high. Our profit target will be set at 1.5 times the risk. So, let's actually do our back testing. So, our win rate is 66, and we increased our account size by 253.95. The equity curve is really stable, consistent, and it doesn't show any signs of serious drawdowns. The profit factor for this strategy is 2.91, and we had 11 consecutive wins against 4 consecutive losses, which is truly amazing. This is exactly how we build a profitable trading strategy. First, we need to find good indicators that would confirm the direction of the trend. Then we need to find a tool that would prevent us from taking trades when the market is ranging. And just like that, by eliminating losses, we'll win the long game. Okay, I hope you found this video useful. Don't forget to smash the like button, it really helps with the channel. And also, if you want to see more videos like this in the future, then feel free to subscribe.